What is going on, everyone? Welcome back to another video. Here we're going to be breaking it down once again with the futures, S&P 500 futures contracts we're going to be looking at today. Plan on going over the monthly real briefly, the weekly, the daily, and if you guys want to stick around to the end of the video where I'll break down the 30-minute time frame, get a little bit more in depth about what occurred throughout the day, a trade that I took, as I've only taken one trade. Been kind of trying to limit my trades throughout the day and wait for the setups to come to me. And today was a day that I got absolutely sloshed. So if you'd like to hear how I got murdered in a one time frame, just stick around to the end and we'll go over that. Before we get into it, if you guys do not mind, please leave a like down below if you are enjoying the content. Leave a comment down below if there's anything you guys would like me to do, any ideas that you have out there. Holler at me. I'd like to hear from you guys. And then I do plan on making a video about my workspace setup, and then I'll in that video I'll leave a link to the workspace with all the studies and everything. If you guys want, I'll have that coming up in the future. So let's go ahead and get into it, guys. We're looking at the monthly time frame right now. We are in a 5-month balance right now. Okay, we have been approaching the top of this monthly balance high, and it has become an area that we've just been kind of just struggling to get through. Volume has been weak as we've pushed into it, and sellers have kind of stepped into this market and taken back a little bit of control. And we can see that on the daily time frame as well as in our intraday 30-minute time frame, as pushes up really have not held. We have failed to go trend in the sense of market profile with the single prints. We've one time framed up several times and have attempted to go trend but have failed. So right now the monthly, we at a very critical level here. If we can get through the 4200 level and push up, there's a good chance that this market could get some legs to the upside. We just have to find acceptance above that 4200 level. However, this monthly range is actually probably one of the smallest that we've seen in a very long time. So if we do not stretch the range to the downside or to the upside by the month end, this could be interesting coming into the month of May. And we may sit here and consolidate for a few more months before breaking out of this balance, which is a good possibility. I mean, there's nothing wrong with this market consolidating. However, at some point, we got to let the steam out, and just which way we let the steam out kind of determines how this market is going to perform. So, critical level here. Let's look at our weekly time frame. Weekly time frame. We are struggling to push through this level, right? We have been battling this monthly balance area high. And usually when you get to a balance area, you want to look to see if you fell at it or if you can push through it or you just stretch it. Those are the three options. And right now we are struggling to push through it. So back on these on these 3 weeks here, you can see we wicked down pretty heavily and then went down pretty good. Right now we are struggling to get acceptance above this area. And, it may be another scenario where we roll back over and begin to trend down again. However, this market is still one time framing up from a weekly standpoint. So we do continue to take out weekly highs. We've been one time framing up 1, 2, 3, 4 weeks in a row now. This market has been one time framing up, but with each push higher, the market has gotten lighter in volume. And that may be something kind of hinting at what this market might do next. So keeping an eye up here, trying to see how we shape up coming into the end of the month. All right, now let's go ahead and look at our daily time frame. Same concept, right? We've pushed up into this area. I've talked about it enough, but just want to show you how it looks on our daily time frame. You can see back here, these couple days we struggled to push through. Kind of having the same reaction right now, but with lighter volume, below average volume to be more specific. But let's go ahead and look at what happened in the daily as far as the daily balance. Now, in yesterday's video, I was discussing about how I may incorporate this day's low if we just get below the day, what I had called our daily balance low and Monday's low right here at the 48 level. I said that I may, if we just stretch it and don't really get much of a push below and go trend below it, uh, like really strong, I was going to encompass this as a 5-day balance. So you can say that we're one time framing down by taking out this balance low, but for me, I'm going to say that we stretched it now to Friday's low of, what was that low? 38, 41.38. All right. And you'll see why here in just a minute when I get into the 30-minute time frame as to why I'm saying that we just stretched it by a hair. So using Friday's low, 41.38 was going to be the balance low. And then today we dipped just below it at 41.37. So, I'm going to make the sellers kind of prove that they want to go trend down. We're going to say not 47, 37. What am I doing? Well, I want the sellers to prove that they can really get this market going to the downside. They're kind of taking the right steps, going in the right direction here by putting the daily back into a balance. What am I doing? But putting the daily back into a balance. So right now, 5-day balance is what I'm going to call it. I want to see if we do take out today's low tomorrow, no matter what, I will say that the daily is down. We'll be one time framing down at that point. However, as of right now, I'm going to just say we are in a solid 5-day balance. Okay, solid 5-day balance. Just chopping around in here. However, if we take out tomorrow's high, still remain in balance, right? You want to see if we either take out 41.37 or 41.94.75. All right. So that is how our daily is looking. Now let's go ahead and look at our 30-minute time frame and get into what happened today. So in more emotional trading, as that's kind of been the theme for the year so far, with gaps all over the place. This is the year of the gap, as Paul likes to say. By the way, if you guys do not know who Paul Asmar is, look him up. I'll leave a link in the description below to his channel. I highly recommend you guys go and check him out. Great community of traders as well. Great mentor, as he does like a live webinar almost every single day. Definitely go check out his channel. He's running a special this month, as it is his 3-year anniversary. Running a special. Definitely go check it out. See if you guys are interested in joining the room. I highly suggest it. You'll make your money back and then some. Anyway, great guy. But definitely check him out. So, and as I'm learning, obviously I'm learning through him. So hopefully, I can continue as my career grows. Anyway, let's get into it. We gapped down today below the previous day's low. All right. Gap down below the previous day's low, just below Monday's low at 41.48. All right. We gapped lower, opened up, and didn't even push down. Couldn't get the overnight low. That's what I have marked right here at 43. We have the overnight low there, overnight high up here. We didn't even get close to pushing and breaking the overnight low. So that kind of showed that sellers were rather weak and short covering came into this market. So we got a quick inventory adjustment, pushed up and filled the gap, almost filled it in A period, and then B period finally filled that gap and began to one time frame up. So by felling at the overnight low, kind of signified that maybe this market wants to kind of grind up like we did yesterday, right? Almost the exact same blueprint as yesterday, where we gapped lower and then pushed up higher, right? Gapped lower and then grinded higher. We almost had the exact same thing happen today. Gap lower and then a grind higher. Except for today, it was in a weaker fashion. We failed to go trend several times with lower value. So value from the previous day is lower. Not surprised to say the least that we failed to go trend, but we attempted to go trend in C period. Let me pull up these destinations real quick. Also, by gapping lower, we did these single prints here ultimately disappear for us. So once we got back into the previous day's range, we attempted to go trend in C period, but failed once D filled that set of single prints. We had a decently wide point of control. It was a little rotational for a few time frames, as we had, point of control basically was at C's low, and we just kind of chopped back and forth. So I took my first loss of the day in G period as I shorted the extreme, expecting this market to really not want to go trend, because we failed in C period and we had a wide point of control down here to kind of go back to and revisit, right? Those points of control sometimes acts as magnets in the intraday, just as they do on a reference point, to the upside, kind of like this day hit this wide point of control, right? So I was expecting G period for us not to really go trend right away, roll over, and then go back to point of control down here. So I'd gotten into a decent sized short position. I believe I had 15 contracts on, decent sized short position, and I had my stop just at the overnight, not the overnight high, but the overnight point of control, which was right around this 69 level. So I had my point of control, or my stop, right around the 69 level. I was short, right around the 63 level, 63 and a quarter to be exact. And we popped up pretty good, and I got stopped out of that position. However, one nuance that kind of you could have taken away from this trade was the fact that in G period, we did not get to B's high. So if I pull up this crosshair, you can see that G period did not get to B's high to even to bring point of control up to B's high, right? So because we couldn't get to B's high, that was kind of a nuance that maybe buyers are starting to step into this market a little bit more, and shorts are beginning to panic. Then we attempted to go trend in G period by holding a set of single prints. Same thing in H, attempted to go trend. And at this point, I was thinking about getting long. I actually did take a 5 lot long position at 68 and a quarter, and then got out of it 68 and 3/4, because I did not feel like this market wanted to really push up and get the overnight high. And you can see here that the overnight high was at 73.50, and we just barely missed it by 2 points. So showing that we were front running that area, kind of wanted, I just got out of the market as soon as possible. I was like, I don't want to be buying up here. I want to buy on a pullback, on an afternoon pullback low setup. And that's usually whenever one of the first few time frames after F period takes out a previous time frame's low. Usually you can buy that dip, and then this market will rotate back up to the highs. And that's kind of what I was expecting in J period. So we began to pull back in J period, and I took my first position around the 63 level, right where they filled. I put on a 6 lot there, and then as we came in a little bit more, I had another bid sitting in at the 58 level. I bought another 12 lot at 58, and then I bought 2 more. So I was long a total of 20, because I was expecting this market to hold and then rotate back near the highs. And had it done it, I would have been in the clear. However, one thing that happened was we got through the 144 simple moving average on the 1 minute chart. I'll show you guys that here in just a second. And the fact that we couldn't get back above it was kind of a nuance. And adding to a losing trade sometimes does not work out. It was part of my plan, but it did not work out. And I just wasn't mentally thinking that this market would rotate back down to the lows. And as a matter of fact, I had my stop way, way too far. I should have had a better stop in, maybe around 57 and a quarter at A's high. Saying that if we got back into that range, then we would go and rotate towards value low. But instead, I had my stop at 54, which was right where halfback was. So I felt like if we got below halfback, then we would obviously go and visit the open. Um, and that's exactly what happened in K period. K just absolutely liquidated this market to the downside as buyers got smoked up here along with me here, and I got stopped out for a pretty nasty loss on the day. Total loss on the day was 172 points. With the micros, not the minis. Thank God, not the minis. But with the micros, which is a pretty hefty hit, about $850 was lost today. But after doing that, we took out that low, right? We took out our low of day, rotated down into Friday's low at 38, and dipped our toe into where that set of single prints were. We did not have enough supply to fill that set of single prints. We attempted to go trend in L period after taking out the low of day, and then we did eventually get the overnight low at 43. But because we had that set of single prints below, we didn't have enough supply on that push down. It didn't fill, and we just bounced right off that in M period to go and fill that set of single prints and then rotate back to half back. So not a lot to lean on today. As far as trading goes, we only have today's high and today's low. No afternoon rally high, no afternoon pullback low, no wide point of control. Just today's high and today's low. So let's go ahead and mark those destinations. So now 41.37 is where this set of single prints start and is today's low. So single prints, we'll do low of day for 2023. And then single prints start from the 13th. That did not save. Wow. Come on. All right. But yeah, that was my trading day in a nutshell. I got hurt on a long or a short position and then got hurt on a long position to the downside. So usually that trade treats me pretty well. Like this pullback here in H yesterday treated me well. What was another good example? This pullback in H on this day treated me well because I bought that pullback and it rotated up higher, right? So it was a setup that I was comfortable with. I just had way too large of a size, and then my stop was way too far from with the size that I had. All right, let's mark today's high. Another thing is I did kind of get a little emotional about it. Kind of blamed the market initially, and then I realized like it was my fault more than anything. And that's something that we all have to be better about, is not blaming the market. We got to blame ourselves a lot of the times, because that was my fault for having too large of a size on, or even starting early up here at 63. I should have, I would have been in a better position had I just started at 58 and then got stopped out, right? I would not have taken it too large of a hit. Maybe put that 6 lot on there, and then have my stop right here, and I would have lost 4 or 5 points to the downside. With in total would have been like 30 points instead of 172 points because I just kept adding on the way down. So I blamed the market initially, but quickly realized that it was my fault and no one else's fault but my own. I would have participated in the short side on the way down and tried to cut back on some of that loss. Obviously reducing my size, but would have tried shorting with this market on the way down. But Rhythmic was unfortunately down. I do not know what happened with Rhythmic. They just kind of kaput, went bye-bye, did not work out. Oh, yeah, I was going to show you guys that the 144 simple moving average. So let's maximize the 1 minute chart right quick. I don't trade off the 1 minute, but I do look at it. Where was it at? Once again, my mouse is broken, so that's why I have to do all this clicking. So right here, when we pulled back into that 144 simple moving average right around 63 at that single print fill, we battled it and chopped around for a little bit. And once we got below it and couldn't get back above it, that was kind of a telltale sign that this market may roll over. And I should have taken that hint. Even Paul, he was kind of pointing out that if we get below the 144, this market could go to the downside because we do have lower value, and we have not gotten either side of the overnights. So, you know, he called it out, and I just was not mentally present. And there was a really good chance to short this market on a pushback up, several times actually. But unfortunately, Rhythmic was down, and I did not get to participate on the downside. So as far as destinations go, let's get you guys the destinations and then get you out of here. So destinations, if we open up inside today's range, potentially expect some chop, right? Because our balance low is now 41.37. If we cannot take out 41.37 and fill the set of single prints at 41.33, then this market will rotate back up to 41.71.75, and then grind potentially even higher up to 41.87.50. Above that, you have 41.94.75. If we open up today and then get today's low at 41.37, we will fill that set of single prints at 41.33. Next destination is the low of day from the 13th at 41.24.50, then 41.13.50. If we get to today's low, we will be one time framing down. If we open up with a gap to the downside, we will be one time framing down. If we open up below the set of single prints, they disappear, and we will still be one time framing down. So with that being said, ladies and gentlemen, I hope you all have a wonderful day. Use stops. Don't blame the market. Blame yourself. Catch you in the next one.